Okay, welcome back. 80 points lower on the Nifty. 10,645 is where we are at this point. We got a very special guest joining us. Mr. Rajnish Kumar, Chairman of State Bank of India, is now with us live from the Kotak conference. Mr. Kumar, it's a pleasure, sir. Thanks very much for joining us. I'm just going to ask you one question. Then my colleague Radha is also here in the studios, and she's got a bunch more. But what's the, assuming that you've been there at the conference for the last couple of hours, what is the one single question being asked of you, to you, put to you over the last couple of hours that you've been there? What's top of minds according to you? And I mean, that conference is full of investors, analysts. What's being asked of you, sir?
So the theme of the conference this year is chasing growth, and the discussion which Uday Kotak had planned for me was around the growth and the price which the banking system has paid for funding that growth. So it was a very challenging topic. I mentioned it to Uday also. And the discussion is all around that whether the banking system, it is geared up to meet the requirements of the economy, and what are the issues and what are the challenges and how do we manage those challenges.
Okay. Mr. Kumar, good morning, sir. Thanks for joining us. You know, now what was the banking system's problem has become the non-bank finance companies or the non-bank financial sector's problems faced by the debt mutual funds and the NBFCs. What is the sense you are getting when you observe that, repeatedly, every now and then, one company saying it is not able to pay up? Do you think that we are going to have, more accidents leading to more NPAs for not banks, but for the entire financial sector?
No, if there is NPA, whether it is in NBFC or in the banks, so there cannot be that there is an NPA with NBFC and then banks will escape. So that is not possible. You have to look sector by sector, that in which sector either the banks or NBFCs have invested that money and whether there is a stress in that sector. And that will determine the recovery situation of these NPAs. There's couple of situations which have arisen in respect of 3 or 4 corporate houses where there has been issue around loan against shares that we have to keep separate. And if there is a problem in the real sector, that will definitely gets passed on to the financial sector. And if you look at it, the turf of the NBFC has been entirely different. There is some overlap between NBFC and banks in the retail segment. And otherwise, the lending which banks do and the lending which NBFCs do, apart from the overlap, but there are distinct business models and distinct areas of lending.
Okay. No, it's not the distinct areas of lending, sir. My point is, until now, we were worried that if the NBFCs don't get funding, which has been the case, then the real estate sector will be affected because they were depending on NBFCs. What we now realize is that there is a second pain point, which is promoter entities also don't get funding. Now, when these promoters have to pay back, if they default, what happens? Likewise, if the real estate companies, their payback time comes, what happens? So for the entire market, entire financial sector, are you convinced that the worst of NPA is over, or is there going to be a decent amount of incremental defaults?
No, at least I am convinced that the incremental default situation is not there.
Okay.
And if we talk about flow of money to NBFC, if you look at the numbers which have been released by Reserve Bank of India, there is a growth in funding to NBFCs. But quality will always be central to the lending, and there are n number of NBFCs who have good quality, good governance, and there is money available for those NBFCs. So it is we cannot generalize that money is not available to NBFC.
Okay.
Specifically to the promoter funding, I think the promoters pledging their equity, I think that is something which needs to be watched on, and it is not the right business model. Because if you have pledged your equity, it means that your stake in the enterprise must be deducted to that extent. Then your net equity has to be determined. So that is something a debatable issue, but over leveraging your own equity, I don't think it is a very good idea. And third thing about the real estate, in last 4 years, the real estate sector, there has been no bubble in that sector. The sector was having a problem, particularly the inventory was there, and because of that inventory build-up, in the last 4 years, the position has now, in fact, in certain geographies, started improving. But this is a fact that for the developer funding, the bulk of the funding was coming from the NBFCs. To that extent, we need to be very watchful of the situation. And good projects, again, it is all about quality. Any generalized statement would not be the right statement to make. Any sector, it is not untouchable for the banks. But the quality, banks or NBFCs themselves will have to be very mindful of this fact that the quality is not compromised.
No, that's what even the NBFC say. It's not a liquidity issue, it's an insolvency issue, whether you want to lend or not. It's not an illiquidity issue. But one last question on this problem. Do you think the debt market problems today can become a contagion and therefore become a systemic problem?
So when it is a loan with the banks, there is always a more time available to address the issues. But the way the debt markets work, and they work mostly on the ratings and the investments, the manner in which they happen, then the debt markets in terms of the patience, which bankers have more patience, but in the debt market, if it is a mutual fund investment or it is a NBFC investment, there the patience or the time to address the issue is much shorter, and for the banks it is relatively more time where you can apply your mind and try to resolve a situation.
Mr. Kumar, just one last question on this topic, and then we'll move on to other issues. We picked up from the market that the NBFC ecosystem, that many NBFCs were unilaterally raising interest rates to so that their borrowers would have no option but to move on to banks, for example, or other institutions, because these NBFCs themselves wanted to create quick liquidity. And these are not necessarily bad loans in that sense. They were actually in better considered segments. Have you seen that? Have you seen sort of borrowers come to you moving away from NBFCs? Have you seen that migration happen?
I have not seen any large-scale migration from NBFC to the banks. But the cost of borrowing for NBFCs, it has gone up for some of the NBFCs by 25 to 30 basis points. And that will get passed on ultimately to their borrowers. But I have not seen many requests coming directly to us. And even for the portfolio sale, when we had announced the program, but I have not been able to purchase the portfolio because there are no sellers.
Oh, okay. All right. So how much you did? 3,000 crore, I think. You announced something. So you of that 14,000 crore, how much could you buy?
No, we did. We told no, the announcement was 45,000 crore, but till January we have only 13,000 crore.
Sorry.
Okay. And other banks have bought more than us because of the competitive pricing and this thing. So what I'm saying is that there is a market for this, and there are many players. SBI is not the only player. And even the sellers, they have been able to take advantage of the competitive situation and get it priced to their liking.
Okay. No, fair point. I forgot the numbers. Mr. Kumar, I wanted to ask you, what is the next step now in Jet Is there a rights issue to bring in capital?
I appreciate your patience because I thought this will be the first question you will ask me. And you know it very well that on individual accounts, bank does not comment.
Okay.
And, but anyway, we should wait for 21st when the company is holding their shareholders meeting. There is a process which we had said that the process is around first step was board meeting, then there is a shareholders meeting, there are approvals. This Jet Airways we have taken under Project Sashakt, and there is an oversight committee appointed by IBA. So they will have a look at the entire structure and the resolution plan. The approval from Ministry of Civil Aviation will be required, and if the rights issue is proposed, then of course the filing of the offer document and the approval of SEBI. So all those approvals are there, but two things I can clarify and tell you that everything will be done within all the regulatory frameworks and resolution framework of Reserve Bank of India, and the entire process will be the process which has been decided under Project Sashakt.
Okay, so that is 66% of, I mean, the intercorporate agreement will be put into force. So only 66% of the bankers will need to approve. Is that what you're saying?
ICA, yeah.
Okay. Okay.
Right. Yeah, 66% is the minimum requirement, but I don't think that in this case there will be any dissent. That is my reading of the situation.
Okay, okay. Can you give us some update at least on RCOM, sir? Will you be taking the company to NCLT? What is the process we should expect?
So it is already in NCLT, and there are some like procedural issues, and once the procedural issues get sorted out, so whether we take it to NCLT or somebody else has taken it to NCLT, the resolution will happen under the NCLT process.
Okay, well, there was another doubt which one of the bankers raised, and that's why I'm asking you this. You know, a part of the RCOM assets were set aside for the Chinese lenders who are unsecured lenders. Now, will that agreement stand, or will that also be brought under the NCLT? And, you know, they are unsecured, so bankers will have the first right. So how does it work? Do bankers get all their money?
So that's what I'm saying, that because now the NCLT process is on, so we have to see what is the resolution plan which is put forward by the company, and then that resolution plan within the legal framework will be examined, and then what the secured creditors will get, who will get from what will unsecured creditors get. This can be commented upon and decided upon only when the resolution plan is filed before NCLT or before the RP, resolution professional.
Okay,
So
sir,
COC will debate at that stage.
Okay, we'll await for we'll await those developments. That's an important case, a big account as well. On a separate issue, sir, on rate transmission. So, an interesting 5 basis point rate cut, and that was all that we got, and that too on small ticket home loans. And this at a time, as you were earlier alluding, there's plenty of cash in the system. In fact, you're looking for creditworthy borrowers to lend to. There's a rate cut from the RBI that's come in. Despite that, yields are still high, and banks are still not sort of cutting rates. How are you looking at the way rates are playing out in the money markets, and how your own ALM is looking?
So the issue is that we need to cut the rate on the deposit if we have to cut the MCLR. And the SBI position particularly is that our rates and the rates being offered by other banks there is a difference of 75 to 100 basis point. The headroom to cut the rates for deposits for State Bank of India, it does not exist as on date. And that is my problem.
Okay. All right. So short point, even if there is another rate cut in April, it looks like it will not get transmitted, sir? Because there is a hunger for deposits?
No, I'm not saying that. Sometimes you draw inferences on your own. So what I'm saying is that for any rate cut or for any MCLR cut to happen, I have to necessarily cut down the deposit rates I am not in a position to do as on date, because the rate which I am paying on the fixed deposit, it is already lower by 75 to 100 basis point. So system has to cut.
Yes.
Other banks have to cut, so that at least on the parity basis, I will also cut the rate on deposit.
Yeah.
But with the current situation, if I cut the rate of interest, then I will have a problem.
Yes, no, I take your point, sir. It's just that you are 30% of the banking system. And therefore, if you have helplessness, then the system doesn't respond easily. And a lot of other banks are already sitting at fairly high credit deposit ratios. So I don't know how much space even they have. Sir, final question. How do you look at loan growth for SBI? Is it for SBI and for the banking sector? How do you think FY19 will end, and how does the first quarter of FY20 look?
So I think the domestic credit, it is growing at around 15%. And SBI's growth is in line with the industry. So domestic book should grow around anywhere between 15 to 16%. And overall growth would depend upon how much growth we get in the international banking book. But domestic, a reasonable estimate for FY20 is 15%.
Okay, all right, sir. Thank you very much for being with us and taking up all of those questions on a whole range of issues. Really appreciate you joining us on the show today. Thanks, Tata, as well, for stepping in for that conversation. All right, so the market has kind of held on. We've been spared the blushes. At least the day's low has been protected for now. Zee Entertainment is a stock on the move. It's rebounded so handsomely from its lows, and even this morning, there's some buying on that stock that's again resumed. We'll come back, discuss all the market trends and more. Rahul Arora of Nirmal Bang Institutional Equities joining in.